wish I could tell you how much effort Eron has put into being here today so that you could really have the degree of enthusiasm behind your applause that I'm going to have behind mine. But I'm going to quit wasting the time because his is so precious. Ladies and gentlemen, Eron Bloomgarden with EKO Asset Management Partners.
Well, thank you so much. With an introduction like that, I like to set the bar a little bit lower and then exceed it instead. But thanks very much, and thanks for the invite, Steve and Grasshopper, to this event. I'm delighted to be here. I'm only sorry that I won't be able to stick around for the judging. But as Steve mentioned, I actually was on vacation last week, so don't feel too bad for me. But had to fly back to New York from Tampa and then back here at 6 a.m. this morning. So what I'd like to do is, how do I control the this thing? Got it. Okay. First of all, you know a little bit about EKO. I'll tell you more about EKO and what we're doing, and more about myself. Steve and Grasshopper found out that I'm an adjunct professor at the Earth Institute at Columbia University, where I teach a class on environmental markets. So they asked me if I'd put my professor hat on for a few minutes and talk a little bit about ecosystem services, natural infrastructure, and natural capital. So I'm going to do that. But what I'd like to do, since I was just in Mexico last week, is to start with a little story, actually a little parable. And some of you may know this already. So it goes something like this. So an investment banker from New York was on vacation at a small fishing village in Mexico. Walking down the beach, he sees a fisherman, and he looks in his boat, and he's got the most beautiful yellowfin tuna he's ever seen. And he says to the Mexican fisherman, "Well, how long did it take you to catch those fish?" He said, "Not very long, a few hours in the morning." He said, "What do you do with the rest of your time?" He said, "Well, I sleep late, I play with my kids, I take a siesta with my wife, and I fish a little bit more." He said, "Well, why don't you fish a little bit longer, catch more fish, and then you could make more money, you could buy another boat, you could actually then buy a whole fleet of boats with the proceeds from that extra boat, and eventually you could own a whole fleet, and you could buy the cannery, and then you could control the means of production, means of distribution, and then you could build up, and basically make a lot of money, and eventually move to Mexico City, move to LA, and then eventually move to New York, and control the whole supply chain." And the Mexican fisherman said, "Well, how long would that take?" He says, "Well, about 15, 20 years. He said, "But here's the best part." He said, "When you move to New York, we can IPO, make a ton of money, and you'll be incredibly rich." And the Mexican fisherman says, "That sounds fantastic." He said, "Then what?" He said, "Well, then you could move to a Mexican coastal village, sleep late, take siestas with your wife, play with your kids, etc." So anyway, I thought this is one of my favorite stories. And two things. First, it struck me as appropriate for an entrepreneurial conference. And second, though, I want to tie this into this conversation that we're about to have about natural capital and natural infrastructure. And it's about getting back to basics. We heard about the box, right? Oftentimes we're creating, so imagine if you had a box or a machine that could suck greenhouse gases from the atmosphere, sequester them in the ground, and while doing so, creating renewable resources, feedstock, and building materials. Right? This sounds magical, as you saw in the video. And in fact, there are scientists around the world working on these things. And they believe, and they've got venture capital money, and they believe that if they're able to figure this out, they can make a lot of money. Well, this exists. It's an ancient technology. It's called a tree. Right? Another example. Imagine if we could create irrigation of land with seawater desalinated by fusion power. Wouldn't that be just fantastic? How much money could we make from that? Right? It's called rain. And finally, relevant to where we're sitting, what if we could build a seawall that could protect us from storm surges, while providing water filtration and critical habitat. Of course, I think you're getting the point, right? So wetlands ecosystems. So this whole idea of natural infrastructure and ecosystem services is about getting back to basics. Without a doubt, we need the gray infrastructure alternatives, or gray infrastructure solutions. But the way that we're thinking and the way that people around the country and around the world are beginning to think is about deploying these natural systems. Oftentimes, more cost effectively, and with other co-benefits that the gray infrastructure solutions don't have. One of the most famous cases of this is the New York City watershed. Right? New York City, where I live, is one of the only large cities in the world that relies on the great majority of drinking water from natural systems. Over 90% of New York City's drinking water doesn't go through any sort of water purification plant, as you probably know. Right? And this is through the foresight of city managers who have invested in a network of land management practices in the Catskills and upstream from the city. Some other examples. We talked about clean drinking water. So using watershed protection and investments in land management, right? Protecting the trees and the natural ecosystems around the reservoirs. Now this model is now being deployed in other cities around the world. We're working on several in Latin America with some NGO partners, the Nature Conservancy and Rare Conservation. Storm surge protection. So the gray infrastructure solution are levees and seawalls. No doubt we need them in certain places. But can we deploy the natural systems? Coastal habitat restoration, mangroves, wetlands, oftentimes at a lower cost and with other co-benefits. And stormwater runoff. Instead of building wastewater treatment plants and big conveyance tunnels, or in addition to doing that, can we implement green roofs, porous pavement, rainwater harvesting, bioswales? So these types of things. So it's a simple back to basics, getting back to the fundamentals, using and leveraging traditional, ancient technology and natural technology. Now, you've heard no doubt about ecosystem services, and so this is a framework to think about some of these things. Some of these services, an ecosystem service, of course, is a service that nature provides. Some of these show up on a balance sheet. Many of these don't. We are, in 2000, the UN commissioned a report called the Millennium Ecosystem Assessment, and that did a variety of things, among others, categorize ecosystem services and into three broad categories: provisioning services, cultural services, and regulating services. Provisioning: food, fiber, genetics, pharmaceuticals; cultural, spiritual, think national parks, rivers; and regulating services. Ecosystem services that regulate our air quality, regulate our climate, so we have a comfortable climate to live in, and then also try to put a value on these, especially those that don't show up on a balance sheet somewhere. The next step, though, is thinking about how can we start seeing these, where can we start getting these ecosystem services to show up in our financial system? And markets are a very powerful mechanism. Right? They do a lot. They provide us information. They provide open competition. They provide price discovery so we all can find out the value of something. Markets are very efficient at allocating resources. And financial markets have an additional utility: risk management, facilitating investment in commercial transactions. So how can we think about using these for what we're interested in, which is accelerating the use of these green solutions? So markets, as we've seen, this is the Dow Jones Industrial Average for the last 100 years. And there's no doubt that on the whole, markets have been successful at driving growth and economic prosperity. And they're very efficient in which Adam Smith's invisible hand, right, at allocating resources. But there's a problem with markets, right? They're an imperfect solution. They overvalue goods, but they undervalue the natural systems that produce those goods. So any economist with few inputs could tell you the value of a forest for the timber that it produces, but would have a very hard time telling you the value of a forest for the biodiversity that's in it, for the future value of any pharmaceuticals that come out of it, forget about the spiritual and aesthetic value. But these are all important values that don't show up in our economic system. Carbon sequestration is one of the things that we just heard about in the video. So increasingly, there have been efforts to try to put prices on these ecosystem services through a set of environmental markets that have emerged and continue to emerge. Carbon. So we've had an international global carbon market that's seen its ups and downs. We now see a robust market in California that started last year for carbon. We have water markets that we've talked about. Mitigation banking here in the U.S. that's covered by the Clean Water Act, right? If you have an impact on a wetlands here in the U.S., you have to, in let's say real estate development, either commercial, residential, or some sort of infrastructure, you need to mitigate those impacts by investing in a mitigation bank. Fisheries, green infrastructure, renewable energy. There are markets in many states for renewable energy credits, energy efficiency, and acid rain was one of the first environmental markets that emerged back in the 80s, which is widely considered a success. And we don't hear about acid rain much anymore. You know, when I was a kid, we heard about acid rain all the time. And so this was largely driven by an environmental market. Now, the second macro trend that I'd like to talk to you about is impact investing. And impact investing is a segment of finance that has been growing rapidly recently that seeks not only financial return, as traditional finance does, but also seeks some form of impact. Over the last few years, it's primarily been social impact. But increasingly, we're seeing more interest from investors for environmental and sustainability impact. So all things being equal, many investors are choosing to invest in the investment that carries an impact with it. New emerging asset class reach $500 billion in the next 5 years. This is a report from the Margins to Mainstream that was published this year by the World Economic Forum. And it seeks to generate measurable and beneficial social and environmental outcomes. We spend a lot of our time thinking about this area and talking to investors. And what we see is there's many different colors of capital. Across the spectrum of risk return and impact. There are, it's not just equity and debt. On one side, you've got the early stage, higher risk, equity type investors. And in these early stage markets, environmental impact markets, we're seeing foundations. Rockefeller Foundation, for example, Bloomberg Philanthropies has supported some of our work. Then you see families and high net worth individuals. And they are increasingly getting involved in impact investing, especially as the second generation comes of age and starts making investment decisions. Second generation oftentimes has been involved and passionate about environmental issues themselves. And family offices and high net worth individuals are actually interesting candidates for these types of investments because they have long-term time horizons. They're not on a 4, 5, 10-year investment window. They're looking multi-generational. And so their timeline, investment horizon fits well with this idea of impact. Impact investors that make PRI and MRI, and then you get more larger stage commercial rate investors, institutional investors and commercial banks. Most, just about all commercial banks now have groups that are thinking about social finance or impact investing. But these need to be larger opportunities. They need to be scalable and more traditionally structured. Another way to think about this type of capital, right? If we map out on a 4x4 chart financial profitability and social impact, financial profitability without social or environmental impact, right? Those traditional financial markets. If it's just social impact without any financial return, you're looking at philanthropy. But this sweet spot of social impact and financial profitability has been getting more and more attention, and we think there's a big opportunity here. So now, third macro trend that I want to talk about is this investment opportunity around the global infrastructure boom. Right? There are a few things going on. One, in the developing world, there needs to be new investment in infrastructure in the rapidly growing economies. In the industrialized world, we need to reinvest in our infrastructure. At the same time, there's a huge financing gap. Right? There is a desire for off-balance sheet solutions. Municipalities are capital. Many municipalities around the country are capital constrained, and so they're looking for alternative private sector capital. And the developing world just is hungry for capital. They need capital for this rapid acceleration. And there's an environmental problem, right? And so can we think about making infrastructure more environmentally friendly and deploying these green solutions? And finally, we have both here in the US, in the industrialized world, and in the developing world, we have increasing environmental compliance obligations and enforcement. And I'll talk more if we have time about that. So I promised I was going to talk about EKO. We are a boutique investment management firm. We are focused squarely on this impact space. We are backed by several family offices, including Wolfenson family, Rothschild family. And our mission is to link private capital with these environmental opportunities. And we do a variety of things. We're working principally in the carbon markets, in fisheries, sustainable fisheries finance, and green and natural infrastructure. Two key partnerships that I wanted to highlight for you. The first is what we call the Natural Infrastructure Innovative Financing Lab. And this is a partnership that we have with two of the country's leading environmental NGOs, the Nature Conservancy and Natural Resources Defense Council, NRDC. And the mission of NatLab is to accelerate the deployment of green infrastructure in cities and municipalities across the country, and indeed across the world, by building and supporting the enabling conditions to attract private capital into these types of programs and projects. We've been working together for about 3 years. Spent about a year in Philadelphia, which I'll talk about in a moment. And then Green Path Partners. It's a partnership with CH2M Hill and designed to identify, design, manage, and finance green infrastructure solutions. And we're working on a project here in Louisiana, which I'll talk about in a moment. A few case studies of projects that we've been working on. So water supply, we just looked at the New York City watershed protection strategy. We have partnered with the Nature Conservancy and Rare Conservation on several similar projects in cities in Latin America. So can you work with downstream water users, bottling companies, municipal water utilities, to get them to pay into a fund to restore watersheds upstream to protect and secure the availability of clean water? So that's one example. And a second example is sustainable fisheries. We have partnered with two US-based conservation organizations, Oceana and Rare Conservation, to work together to find opportunities where private capital can accelerate the transition from an unsustainable to a sustainable fishery. And we're working in the Philippines, Chile, and Brazil to do that. And this work has been supported by Bloomberg Philanthropies, actually the largest grant that Bloomberg has yet given. And then carbon sequestration. Instead of what people have been working on, carbon capture and sequestration, can you use forests to sequester carbon? Climate change, obviously, huge global issue. And we've partnered with CH2M Hill and the Louisiana Coastal Protection and Restoration Authority. And in fact, just a few months ago, or about a month ago, we had a methodology approved for the verified carbon standard to create that would credit wetlands that are created here in Louisiana for carbon credits. So those are a few examples. Now, I did want to talk for a moment about green infrastructure, and I'll go through this quickly because I know we only have a few minutes left. I don't know if you can read this. Each year, stormwater generates urban runoff of 10 trillion gallons of polluted water. Huge problem around the country. Many cities are out of compliance with their Clean Water Act obligations, and a traditional gray alternative is to build more water treatment plants and large conveyance tunnel and storage tunnels underground. The green strategy is there's a green infrastructure strategy, and here are a few things that you can do. Downspout disconnections, rain gardens, rain barrels. You're seeing here permeable pavement. Now, a challenge to finance, because as opposed to one large water treatment facility, which is a traditional financial structure, these are disaggregated, they're hard to securitize, there's really no collateral. And so, so we looked at this. Actually, this is Philadelphia looked at this because they were hitting their Clean Water Act compliance obligations. And they said, well, the gray infrastructure solution, these are over 20 years, is $6 billion. Now, if we try to hit our goals using a distributed green infrastructure strategy, it's just over $2 billion. Well, let's try that. And so Philadelphia is the first city to attempt an integrated citywide green infrastructure strategy. And they came out with that plan, and they're planning to spend nearly $2 billion for green acres. One of the things they've done is they've created actually a parcel-based fee. So what they've actually done is said they did a GIS map of the city, and now instead of, if you're a commercial landowner, instead of just getting a water bill that's based on your usage of water, you'll have two line items in your water bill. One will be your water usage, and the other will be a stormwater fee that's based on the impermeable surface area on your property. So there are winners and losers. Airport doesn't use a lot of water, but has huge impermeable surface area. So of course, their water bill has just gone up. University of Pennsylvania, opposite, right? Uses a lot of water, has lots of permeable surface area, their water bill is going down. So changing the incentives, the other thing some cities are thinking about is creating citywide markets for stormwater credits. So most cities have requirements where if you're building a new development or have a major retrofit, you have to capture stormwater. And what many cities are saying is, on site, what many cities are saying is, well, maybe we'll allow you to capture that stormwater off-site, or maybe another property owner can capture that stormwater for you and sell you a credit. So we're seeing a new environmental market develop. That's actually a citywide environmental market. Cities, Washington, D.C. is probably furthest ahead in thinking about this. And here are some images of Philadelphia before and what they hope it will look like after. And so you can see the benefit, right, the co-benefits associated, not just stormwater, but neighborhood beautification, economic revitalization, urban air quality. And here's another picture. So we'd all like that to happen to our cities, of course. So just in conclusion, back to basics, back to fundamentals. Let's think about going back to using natural systems where we can. I don't want to leave you with the impression that that's the only solution. We still need the gray infrastructure alternatives, but let's try to deploy as much of this green infrastructure as we can and green solutions as we can. The two large macro trends that I wanted to point out, markets to value nature continue to evolve, and this impact investing segment, huge emerging class of investors that are really interested in aligning their investment goals with their ethics and with their desire for economic or environmental sustainability. And you have more and more investors seeking impact. I'll close with that. Thank you very much. It's been a pleasure, and I'll stick around for questions.